Bitcoin's recent performance has everyone talking. With resistance levels forming and market cycles repeating, we might be in for a wild ride. But what's really going on beneath the surface? Today we're diving into Bitcoin's key resistance levels, its historical cycles, and how monetary policy could shape its next big move. If you're a crypto enthusiast or just curious about where Bitcoin is heading, you won't want to miss this. Let's start with the 20-week simple moving average, which currently sits around $62.5 thousand. Right behind it, the 21-week exponential moving average is slightly lower at $60,000. These levels are creating a critical resistance zone between $60,000 and $64,000, and breaking through this zone could be the turning point for Bitcoin's next bullish run. If Bitcoin can push past this barrier, we could see a significant upward shift in market sentiment. But if it fails, that's where things get tricky. Now this is where historical cycles come into play. Looking back at 2019, we saw a similar pattern, a prolonged bleeding phase lasting anywhere from 6 to 9 months before a recovery kicked in. This cyclical behavior is common in the crypto market, where we often see long consolidation periods followed by sharp movements. If this trend repeats, we could be in for a few more months of turbulence before Bitcoin starts gaining momentum again. But it's not just market cycles that are driving Bitcoin's trajectory. Monetary policy is playing a crucial role. As of now, rate cuts haven't been implemented, and this is affecting Bitcoin's ability to break out of its lower high structure. Many analysts are waiting for significant changes in monetary policy, like rate cuts or shifts in global economic strategies, to provide the spark that Bitcoin needs to overcome its resistance. Until those changes happen, Bitcoin's movements will likely remain cautious. Many traders who were previously skeptical about the potential for a longer-term downtrend are now coming to terms with the possibility of extended lower lows. This shift in market sentiment is important because it signals that traders are preparing for more downside before any major recovery. Speaking of recovery, the timing is key. Historical patterns suggest that we may still have several months to go before Bitcoin fully recovers from its current corrective phase. Understanding these timelines can be incredibly valuable for investors looking to time their moves. If we follow the trends from past cycles, we could see Bitcoin beginning to rebound later this year or early next year. But it's not all bad news. One of the most interesting developments in 2024 has been the increase in Bitcoin dominance. Typically, during bearish markets, we see a decline in Bitcoin dominance as traders flock to altcoins in search of quick gains. However, this year has been different. Bitcoin's dominance has actually increased, suggesting that investors are starting to view Bitcoin as a safer bet compared to other cryptocurrencies. This shift in sentiment could be a signal that Bitcoin is solidifying its position as the go-to asset in the crypto space, especially as global economic uncertainty continues to loom. So, what should we expect moving forward? The next few months will be critical. As monetary policies evolve and rate cuts potentially come into play, we'll start to see how Bitcoin reacts. Will it finally break through the $60,000 to $64,000 resistance zone? Or will it continue to struggle against the weight of broader economic forces? In conclusion, Bitcoin's current resistance levels and historical patterns indicate that the road ahead could be bumpy, but not without opportunities. By understanding the cyclical nature of the market and keeping an eye on key factors like monetary policy, savvy investors can better navigate these uncertain waters. The next chapter of Bitcoin's story is unfolding, and it's going to be fascinating to watch how it plays out. Stay informed, stay prepared, and keep an eye on those resistance levels. They could tell us where Bitcoin is heading next.